The Organization of Petroleum Exporting Countries, or OPEC, along with its allies, is working to boost crude prices. But the markets are resisting. Last Thursday, OPEC Plus ministers decided to increase their voluntary output cut. Here's the key figure. They're reducing oil production by 2.2 million barrels per day in the first quarter of 2024. Saudi Arabia, the biggest player in crude exports, is leading the charge, extending a 1 million BPD cut until the end of March 2024. But here's the catch. The markets aren't impressed. Right after the announcement, both WTI and Brent prices dropped by 2% by Friday. They were down 2.49% and 1.61%, respectively, for January contracts. Let's look at the numbers on additional voluntary cuts. Russia is cutting by 500,000 BPD, Iraq by 223,000, UAE by 163,000, Kuwait by 135,000, Kazakhstan by 82,000, Algeria by 51,000, and Oman by 42,000. The total of additional cuts pledged on Thursday, 900,000 BPD. But the market's response has been lukewarm, and doubts are emerging about whether these cuts will actually result in fewer barrels being produced.
There are a few issues going on with OPEC Plus right now. After their meeting last Thursday, about a week back, prices have gone down by almost 10%, and this is something extraordinary. In fact, when the OPEC ministers met, they were supposed to meet on 26th of November, and they had to defer that meeting until November 30. And there were certain reasons being speculated for that postponement of the meeting by 4 days. And then it was anticipated that OPEC would come out with a house in order to address their concerns. And they did so, to be fair with, at least in some respects. There was a glut in the market. Prices were already going down. OPEC was aware of it. OPEC plus both Russia, Saudi Arabia, and virtually all the other OPEC members wanted the prices to go up. So they reacted by cutting the voluntary outputs, and they stress on the word voluntary, from 1.3 million barrels a day to 2.2 million barrels a day. Until then, what was happening? That Saudi Arabia had opted to voluntarily cut its output by 1 million barrels a day. Russia, the other giant in the OPEC Plus, had opted and agreed to voluntarily cut its output by 300,000 per day to roll over its output cut into the next quarter from January to March. And Russia opted to increase its voluntary cut by 200,000 barrels. And that meant that its voluntary cut went up to 500,000 barrels a day. This included crude as well as fuel products. And then there were other OPEC countries who also agreed to a voluntary cut of 700,000 barrels per day. So this meant that there was an increase. So what happened? That in the immediate aftermath of the OPEC meeting and announcement on 30th of November, prices began going down. There were a bit flips somewhere, one could notice it. But as of today, it has gone down by 10% of the prices that was there on 30th of November. That meant that the markets have taken the announcement in a negative manner. There are question marks that this additional output cut is basically a voluntary cut, and markets are concerned about it, are weary about it. They are not very sure that this voluntary cut would really be implemented. So the market's faith on the discipline of OPEC Plus remains very low, and that has contributed to this downward journey of the oil markets. Then there are a few other issues also happening at the same time. there is an inventory build in various places of the world, indicating that the global consumption is down, is not up. The global consumption is weak in a sense. For instance, over the last month, it was somewhere the US crude bill was something around 440 million barrels, which was almost 20 million barrels up than the month before. Then there is a production growth in various parts of the world. In fact, in the month of September, this is the last month that has been reported by the Energy Information Agency of the US, that in September, the US output went up by 13.24 million barrels a day. Now, this is the highest level of production of output ever done by the US. 13.24 million barrels a day was the US production in the month of September. So this also indicates one thing, that the markets that have been left behind by the OPEC Plus through their output mechanism is being taken over. That share is being taken over by other producers, including the US. And then there is another aspect of weakening global manufacturing. The US November manufacturing activity has been pretty low. It has gone down. The Chinese production and manufacturing activity has gone down, although there has been a recent indication that the Chinese exports have gone up in November, but still the manufacturing activity is under a question mark, is under a cloud. So when the US manufacturing activity has gone down, the Chinese manufacturing activity is under question mark, that means the global consumption again is under question mark. And in addition to all these market things, there seems the OPEC house is not much in order. The reason for the deferment of the OPEC meeting from November 26 to November 30, it was being said that it is being done because the African producers, the OPEC, they wanted a higher output quota. And since the OPEC could not come to a conclusion by November 26, they needed a few more days to streamline, to get their house in order. That, despite the deferment, that doesn't seem to be the case. In fact, one of the members, Angola, has said that they would maintain their output at 1.18 million barrels a day. And that virtually no sub-Saharan African members of the OPEC have agreed to or are ready to contribute to this voluntary output cut. So basically, OPEC has not been able to still streamline and put their house in order. So what does all this mean? It means a very interesting thing, that OPEC seems unable to influence the global oil markets. And this is the new world. This is the new reality of the energy world.